Hi, I'm Adam,
This is Kevin.
and we are Tech Guys Who Invest. This is the place for business people and investors to learn all about investing. We offer a fresh perspective on what it's like to have a day job while investing, and we share lessons learned on our investing journey. Our vision is to educate and entertain you while adding tons of value to your daily commute. Welcome to our show.
Welcome, everybody, to another episode of the Tech Guys Who Invest podcast, where each week you learn how to invest wisely and safely. Today, we're talking about something that's really interesting that's happening in today's market. So I was listening to the Joe Rogan podcast, which I listen to depending on who the guest is on. This one was, in particular, was the Elon Musk episode, his most recent one. And one thing that they both have in common is that they are moving from California to Texas. You know, Tesla's moving their headquarters to Texas. I saw a recent article where Oracle, which was founded in Redwood Shores, San Mateo area in the Bay Area, is moving their headquarters to Texas as well. So you're seeing a mass exodus outside of California. Or, you know, people are leaving that state for a number of different reasons. We're not going to get into, the politics of it. We're going to talk about where you can find this information, where people are moving to, and what that means, what that could mean for you as an investor. So, Adam, I know that you have some information up from some of the resources, which we'll put in the show notes. But why don't you share with us where people are moving to?
Yeah, so a lot of investors look at things like the U-Haul migration trends report. That's pretty popular. I know a lot of multifamily investors who look at that report, and you can Google for it. It's on uhaul.com's website, which we can put in the show notes for you guys. But the 2020 migration trends report is real interesting because it talks about the data that U-Haul tracks, because people are renting, they're moving trucks and trailers and renting them for one-way moves. So then, that lets you know who's moving from and where. So that's kind of interesting. And Tennessee claimed the number one spot this year. Texas was in the top two, and Florida was third. So, like Kevin was saying, a lot of people are coming out of these heavily populated areas like California. New York City is another one, and all through the Northeast, it looks like, New Jersey, the bigger cities up in the Northeast where it's densely packed, and people are moving to the South, and particularly in areas that aren't as dense, right? States like North Carolina, states like Missouri, Alabama, they're picking up lots of people as well. So in this report, it's kind of interesting. The states ranked by migration growth, I'll give you the top 5: Tennessee, Texas, Florida, Ohio, and Arizona.
Okay, so with the top 3, to my knowledge, those 3 states don't have a state income tax. Whereas California has a state income tax. I believe the state of New York has a state income tax as well. So people who are from California, you basically get like a pay bump, right? That state income tax is gone. So I think that's a big idea there, is you are paying less effectively in taxes. That's a big reason. I think another reason why people are leaving those states is they're seeing that remote work is picking up, right? That means that you don't have to go into the office, or there's a bigger push, I think, within companies that are realizing it might be cheaper for us to have people work remote, right? You can get rid of the commercial lease or that commercial building, do something else with it, and have your employees work remotely. People are happier in that regard. They can live wherever they want to. They're not tied down. So I think people are seeing that, we don't have to live in Silicon Valley, pay $1 million for a 900 square foot home. You can make your money, extend it to a larger area in those states that we just mentioned: Florida, Tennessee, and Texas. So there's a lot of reasons why people are moving to these areas. As far as weather, can't really beat California, so it's probably not that.
Yeah, I hear you. Now, one thing that's interesting also, Kevin, that I just heard on another podcast within the last week or so, with people now being able to work remotely so easily, and with so many companies actively supporting that, and encouraging their people to do that, folks have started to move to towns near national parks. So these little towns that historically really haven't had much except for people just kind of passing through on their way to the big national parks are starting to see people move there. Now, all of a sudden, the price of real estate in those areas is starting to go up. And
Right.
it's kind of interesting because my family is actually talking about doing something similar to that for a short period of time in the summer. Like we've been talking about, taking maybe a month or so this summer and going and living out west in the mountains somewhere. So it's
That's
kind of an
exactly what we're doing
interesting
too.
trend.
Yeah, I agree with you, and it's showing that internet isn't a luxury as much anymore. It's going to turn into this necessity that you need internet to keep going, whatever that means for society. That's kind of out of the scope of our conversation, but it's more so we're starting to see that trend that kind of builds upon the fact that people are working remotely. I'm excited to see that, and I'm happy that if people can work remotely, it used to be this cool thing. Oh, I work from home. Now it's almost everybody I know is working from home. So it's really interesting to see how that's transpiring and transforming.
Yeah, kind of a norm, right?
Exactly.
But what does it mean for investors?
Yeah, that's another thing. A great transition. So if you followed what's happening with like the GameStop stuff and stuff like that, where a whole subreddit was able to, people make the argument of manipulating the market or whatever, there was a lot of just emotionally driven stuff. Like people wanted to stick it to the hedge funds, and the hedge funds were coming back on the news and stuff. To my knowledge, and I'm not the smartest stock investor, it didn't sound like there was a lot of data that supported this was a good play that to go against the short of what the hedge funds were doing outside of sticking it to the man. And with the information you're getting with the migration data, you're getting information that's saying, hey, this is where people are moving to. That would reason that those real estate markets are going to grow at some capacity. The demand is going to increase, so the houses are going to appreciate more. So thinking about whatever your asset class may be, not everybody that moves there is going to be able to afford a home. But chances are, if you're going from California to a smaller town in, say, Texas, it's going to be a stark difference from how much more your money can make you or can buy you. So that's another thing to consider. But people who aren't going to be buying, they're probably going to be renting, right? So they're going to either be renting higher class homes because they can afford it more, or whatever the case may be, is you're able to see that objective data saying this is where people are going.
Yeah, and it really is something for investors of many different types of assets to look at. For example, self-storage, right? Those people are going to want to store their stuff somewhere. So, other types of asset classes will also want to pay attention to these trends. And, I know for multifamily, we're always looking for where that population growth is and where that rent demand is, where the growth in jobs is going to be, and that sort of thing. This one's kind of interesting because the jobs is not necessarily tightly correlated to the movement of people because of the reasons we just mentioned.
Right, not anymore. Or I think we're transitioning away from that. The luxuries, though, like the retails, like a Target or something that wasn't in this small town but being built up, that could happen. I can see that happening, right? And that may make the neighborhood better or whatever, worse, whatever, depending on how you look at it. But if you're not looking directly, let's say people are moving to the major cities within Tennessee, like Nashville, Knoxville. Look outside, look at the tertiary markets. What's touching Nashville? What's around there? That might be where people who were once living in Nashville are getting priced out, moving out to. So I think it's just going to be a net effect of an increase in the overall real estate demand, if you will.
Yeah, I mean, we're even seeing that in some of the markets that we're in around those areas, and so we're looking more at some of the suburban markets and as you said, the tertiary markets as well.
Right. So if you know this information, what can you do? Well, if you see this and you're like, you know what, I want to start investing in real estate. I can't afford what's happening in California. You want to invest in Texas. You want to invest in Tennessee. Start networking with people that are out there. See if you can attend these local meetups from afar. It's not an unheard of thing. People have been doing it in the past, but now you're seeing there's this mass exodus. You can basically jump on that train, if you will. Of course, we're not saying that you buy something and bank on the appreciation, because that's just speculation, in my opinion, right? Finding a way to get that cash flow. With multifamily, you're value adding where you can then increase the rents. So that's one example of creating that cash flow. With notes, you're buying a performing note where somebody's making sure that they pay, and they're paying that monthly mortgage. But being able to buy correctly is what you should still continue to do. Don't let this hype of, hey, everybody's moving here, dictate how you make this decision. Don't feel like, oh, everybody's moving to Tennessee, I need to buy a house in Tennessee, and then hope for the best. That's a terrible way to invest, in my opinion.
Yeah, it's a good point, Kevin. And to just kind of stack on that a little bit, make sure that you are using actuals and real data points when you're doing your deal analysis. Don't speculate. Don't rely on pro forma data or anything like that. It's very important when you're doing your analysis that you are relying on real numbers and verified facts for your data points.
I always go from the idea that you won't be faulted for being more conservative with your numbers, right? Because if you say, oh man, it could have appreciated, you're looking, hindsight's always 20/20. If you were super conservative with your numbers and then you didn't do the deal because it didn't fit, and then it appreciated, of course you could look back in the past and say, well, it would have done well if I bought it, but the opposite could also hold true in that case. So staying conservative, I think, is always, you won't get faulted for it.
Absolutely. Anything else that you want to add on this topic, Kevin?
So I think that when it comes to where people are moving, you could, right now it seems to be a trend. Googling it, seeing what other information is out there. Going on forums is another thing. Going to Bigger Pockets, seeing if you can join local meetup groups or local real estate investing or whatever REIAs are, real estate investing associations, or whatever the case may be. Getting your ear to the streets in those neighborhoods and seeing what's out there. So yeah, use the data and definitely stick to the math.
Yeah. Have questions about any of that? Always feel free to reach out to Kevin and I. We love it when our investors reach out, and thus techguy.com is a way to do that.
All right. Thanks, everybody.
Hello, TGWI insiders. We'd like to talk to you about our big goal for 2021 that we're determined to hit, but we need your help to hit it. Our goal is to get 250 positive comments on Apple Podcast. You can help us in less than 1 minute, even as you're listening to this podcast. On your phone or computer, you can do this with 3 simple steps. 1, search for us on your Apple Podcast app. 2, navigate to our podcast page by clicking our logo. 3, scroll to the very bottom where it says leave us a review to leave us a 5-star review and a positive comment. That's it. Quick and easy. You can also get these step-by-step instructions by going to tgwipodcast.com/review. It's fast, easy, and would help us a ton. Thanks for your support, insiders. That's it for this episode of Tech Guys Who Invest. This is Adam.
This is Kevin. Thank you so much for listening to this week's episode. Be sure to subscribe to the podcast for the latest episode updates and to receive additional investor insights to help you invest wisely and safely. You can join the TGWI Insiders community at tgwipodcast.com/subscribe. Lastly, we would love to connect with you. The best way to reach us is by sending us an email at techguyswhoinvest@gmail.com. Thanks, everybody.